Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday update for the last day of trading on April 30th. Well, it's been quite an interesting day so far, but I want to start on the members blog because we're doing something a little bit different here. We have the Monday weekly trade triangle. So we give you the signals right away. You can find them yourself, of course, by just doing a simple search, but we show you the symbols, and you click on here, and this takes you right to the symbol list of what we're seeing here, plus 100. These all had weekly trade triangles today. Now, the idea basically is to have the market have a monthly trade triangle, and when you get the weekly trade triangle that confirms the upward move, then that's what you want to do. Also, our daily exchange, we just put that up today, and these daily exchanges have become very, very popular. There's 24 comments over the weekend, just on Sunday alone, and if you look at some, well, I'm off to Kangaroo Island in New Zealand tomorrow, as a matter of fact. But there's tons of posts, tons of people you can talk to in terms of our members. Video Amazon, you see that, and of course news we put up here. But you'll see that we have a lot of things going on now with Market Club. And these are all for members only. So if you're not a member of Market Club, you may want to join. Let's go to our member portfolio page, and I'm looking at the stocks we're looking at right now. The S&P 500, it's a plus 65. Now, plus 65 means it's in a trading range. It hasn't gotten out of that trading range. So I'm going to go, this is a weekly chart, of course, but I'm going to go on a daily chart, and we're going to subject this for 3 months. And you can see we've got our MACD is just beginning, it's just turned up on the upside. I think there's more chances of this market going higher. The only fly in the ointment, so to speak, is the weekly trade triangle. And we give you the turnaround point on that. And in fact, if we just go back to our portfolio page, you'll see the members blog, you'll see what I'm saying. Here's the turnaround point we're looking for. Let's just go back right to the points we're looking at. And you can see right here the gold trigger point, oil trigger point. And if we click on here, you'll see that we're looking at the S&P 500. The trigger point there is 1,407. So if we go back to our portfolio, you can see we're about 10 points away from that right now. So if we get that level, that'll click in and turn our weekly trade triangle green, which means it'll be all full steam ahead, as they say, and it'll be very positive for this market. And as we look at the Dow, you can see the Dow's actually very close to breaking out into new high ground. And the question is, why is this happening? If things aren't so great in Europe, why is the U.S. going up? Well, there's nowhere else to put your money. That's the bottom line. You can't put it in bonds. They're paying no money whatsoever. Interest rates are very, very low. So people are turning to stocks, U.S. stocks, of course, and that's why the market's going higher. So again, the weekly trade triangles are red, indicating a trading range, and we have to come out of this if we're going to go higher. So let's go to our next market. That's going to be the NASDAQ. Heavily influenced by Apple, of course, which is down, gained 65. We want to see this market just begin to turn around in the MACD, so watch that very carefully. One thing that's impressing me today is some of the metal markets, because we were under pressure, and we've seen that market really come up from the lows of the day. And you can see we traded down to 30.50 on the silver, and we're minus 70, but we've come right back up to pretty much to where we closed. So 31.02 is the last price. This is real-time prices, and you can just see how flat the MACD line is. Just like it's like I don't know, no life here, and there's really no life at all. But let's see how this plays out a little later on today. What's interesting also, we're going to do the gold market next, and that's had a really kind of move up from the lows. That was under pressure early, but look at how it's come back. We traded down as low as 16.46, and now we're 16.63. So we've come up almost $20 from the lows, actually certainly $15 from the lows. So it seems to have support. You've got the MACD turned up, so it is positive, but we need to do some more work on this market if we're going to get the weekly turned around, which is the intermediate term trend turned around. We give you the levels on that, of course, on the blog. So let's go to our next market, and this is copper. Now, copper is interesting today. We've flashed a weekly signal on the 29th, which is Sunday, of course, but you also got to confirm today. So all of our trade triangles are positive on this indicator, indicating that we're going to see this market go higher. As we've said before, when we had our monthly, remember we had our monthly, which is positive, the red was negative, and the daily was negative. I said, watch the monthly. That's the key for the trend in this market. Of course, we've come all the way back from support at 360, and we're currently trading at 382. So the MACD has made the crossing. Let me just show you what that is. So looking at the screen, you're looking down here. Here's the cross right here. And it's turned the blue line up and indicating that the trend is up. Here's the weekly, and here's the score, plus 100. So even though the market's down a little bit from the weekly price point, which is 383.95, it's still, we can still do that a buy. So let's clear the screen off and go to our next chart. And the next chart we're going to be looking at, let me go back to get my cursor back on the screen and get this back up. Next chart we're looking at is going to be the crude oil market. Now, the crude oil is really, really interesting in my mind. We are plus 75, which means it's an emerging trend. We've already mentioned the levels on our blog where this is going to kick in. And about another $1 higher in this, I think 105.50 is the level we're looking at. This will be a very, very positive light. But if you look on a close-only chart, just a simple close-only chart, you can see this market's really beginning to flatten out. Here's the highest close. Recent high close is 104.66. We're 104.51 right now. We closed at 104.85 last week, so we've really made the turn. I think we need to see a little more upside momentum. It just isn't there at the moment, but you can see on the MACD that's turned up, and that's indicating a trend reversal. Actually, that's sort of kicked back about there, right around here somewhere. But you can see from this point here, which is right around here, the market was basically, MACD was down, and the trend was down. It just has begun to make that turn. So it's very important to obviously follow one of these indicators. We're a little bit overbought, but we may be coming down to build that up. But I still think this is a base to push this market higher. So let's see how that works out today. So clear the screen, and we're going to go to our next market. And let me just get my cursor back on. There we go. And we're going to go to the United States USO, which is the oil ETF that's very popular. And the 39.63, we closed at 39.64. So I would say anything over 39.65, 39.70 to be safe would be a very good indication this market's making a turn to the upside. So let's see how that plays out today. Remember that number, 39.70. So going to our next market, and that's going to be the euro dollar. The euro dollar is actually a little bit under, kind of confusing here. It's, why hasn't it gone down? Look at the very high interest rates in Europe. I mean, they're paying you a lot of money to hold those things. But look at what we're seeing today. And this is going back to, we talked about this before, and this is all about divergences. Look at this divergence. We're heading down in the momentum, but the prices have been heading up. That's not a good sign. It usually means a reversal. The only thing we have going right now for this market is the MACD that turned around just, I would say, right around these levels here. And it's flattening out a little bit, so we may see more things. But longer term, this market looks like it wants to go down based on our monthly and weekly triangles. So let's see how that plays out. But I would say I'd rather be short than long this market. So let's clear the screen and go to our next market. The next market we're looking at is what we consider to be a very, very important element for inflation. We've made the turn on the MACD on the downside, and let's just put a candlestick charts. And I like to see close only, but I also like to look at the candlestick charts. And you can see the candlestick charts really did sort of bottom out right around here. And if you look at the MACD just made a turn right around this day here, around the 302 area. So we're up a little bit from there, but generally speaking, the market is still mixed. It's still not out of the woods. It still needs to do more work in our opinion. So that's why we have a 55 rating on the CRB index. Excuse me. Let's go to our next market. The next market we're looking at is Barnes & Noble. This is the big news story today because of what's happened with Microsoft. Microsoft made a $300 million investment, if you haven't heard already, and this pushed this market quite a bit higher for the day. But again, it's interesting because something was occurring in this market last week. If you were following this market, you would have picked this up right away. We had a signal on the 23rd of April at 1365 that something was going on. This is a big up day. This is not to be an ignored day. Kicked in on the weeklies. So if you had to be in short, which was the previous trend in this market, you would have been out of the market. Maybe you've gotten some of this move today because they kicked in at 1537. The market's at 2231. But nonetheless, the pattern has been on this market. It has generally been sort of sideways to lower, and certainly this is a big, big day pushing this market much, much higher. So plus 100, so the trend is clearly up on this Kindle-inspired rally. Notice it's not a books, but it's Kindle, electronic books. So let's go to our next market. Next market we're looking at is Sunoco, and that's had a big move up here. You can see, let me just take off the Fibonacci, but you can see that's where the market is right now. Let's scoop that into just 3 months. We don't see, boom, big, big move up. But again, the weekly kicked in and caught this move. This is why the triangles are so very popular and so powerful. So if you scope this out just a little bit further, you can see the monthly kicked in a long time ago, back in December. And here we are. We had to wait all this time, but boom, it's paid off. And that's why the long-term trade triangles are very, very important to follow. So let's take a look at our last market, a couple more markets. Harman International, we kicked in last week. So what you're looking for is to have a monthly trade triangle that's up like here. Here's a signal right here. And let me just put this in so we get an idea of what we're looking at. The idea basically is once the monthly kicks in, and it kicked in right here, and the price was 44.60, okay? That was the monthly signal. So when the market comes down, and we obviously right around here we would have gotten a signal to get out based on, if you're an intermediate term trader, that is now. But this is one of the things you want to look at, in my opinion. So we pull back. Here's a signal at 48.19. The market's at 50. It's just up a couple of dollars from there, but you would have avoided this move. You would have caught the move, obviously, with the trade triangles because they're all green. But here's the other thing I want to share with you, and I'll clear the screen very quickly on this and go back to our, see, there's the weekly I told you about. So I'm going to put in the Fibonacci tool, and this I think is a very good way to trade. So let's scope this down here. So here you have, let me just take that off the screen, and let me get my little illustrator on here. So here we have the trend turning upper right here. That's a monthly trade triangle from 44.66. Okay, that's where we said the trade triangle kicked in right here. Okay, so you had the pullback, you had the exit point right here to, if you're an intermediate term trader, and then you had a buy signal here at 48.19. Now here's the important thing. So here's the market going down, gets into the 50 area right here. That's a 50% Fibonacci retracement, and that's market turned up. You had a buy signal. That's a pretty good buy. Pretty low risk buy in my opinion. Plus you had the MACD turn up as well. So I think you had two things going for you. Now you have all three triangles right here giving you a plus 100, which is a very positive score for this market. And this market is HAR, Harman International Industries. So you may want to take a look at that. So let's clear the screen and go to our last market. And the last market we're going to be looking at, of course, is going to be, here it comes, Sprint, Nextel. What's going on here? Well, the long-term trend on the monthly trade triangles is positive. The weekly and the daily are still negative. So it did have a big move up considering this is a very short stock. Now, one thing you can do here is look at this on a close-only chart. So let's close-only chart. And you're so oversold on this, but you can see the momentum on the MACD is beginning to wear out. You also have a positive divergence building here. You see how this is kind of flat, but the momentum is doing. The key thing to me is this close right here. If we closed over this level, I think you'd have a double bottom pivot point for this market to rally. Now, it's only at $2 share, so it's $2.42 right now. But if we closed over this level, and I'll tell you what that level is going to be. So let's just clear the screen off and get my other indicator on here. The level to look at on a close-only basis is going to be, hold on, 246. So we're 243 now, so you can tell how it's really kind of very, very tight. So 246, if we close over 246 with 243 right now, I think that's a pretty good sign. 240, 2.50, 2.5 would be excellent, but it would turn a lot of these indicators higher, and I think we'd see a rally from current levels. So anyway, don't forget, if you're a Market Club member, to go to the Daily Exchange. It's there every day. You see our comments that keep coming in. We usually get about 40 or 50 comments every day from members, and it's a really great way to exchange ideas, exchange thoughts, and share with your fellow members what you're looking at. Hey, this is Adam Hewison. I'm going to be off on vacation, I'm happy to say, and some business, and I'm going to Kangaroo Island in New Zealand, and it'll be fun. So hopefully I'll be blogging some photographs and some thoughts on the markets from that area. So have a great day trading and every success using Market Club and our trade triangle technique.